I hope you enjoyed the session so far this morning. I'm delighted now to welcome John Berrigan, Director General, Financial Stability, Financial Services and Capital Markets Union of the European Commission, to give a keynote address. John represents the European Commission on the Economic and Financial Committee and the Financial Services Committee. He also represents the Commission on the Financial Stability Board. He attends the European Systemic Risk Board and is a permanent observer on the Single Resolution Board. Thank you.
I think my speech spans noon, so good morning and afternoon to you all. It's a great pleasure for me to be in Dublin today. It's my hometown, although it's not the part of my hometown. I'm a North Sider, but I can still survive here. Good. No, first, it's a great privilege to have the opportunity to address this very important conference. So I'd like to thank the Central Bank for giving me that opportunity. As the very interesting title of the conference suggests, financial policymakers are currently required to navigate through a highly uncertain political and economic environment. And in less than 4 years, we've experienced a global pandemic, the invasion of Ukraine, and most recently, the very troubling events in the Middle East. And taken together, these developments have triggered profound geopolitical changes across the world, with inevitable consequences for international economic and financial relations. And in such circumstances, issues of economic security have inevitably come to the fore. For the EU, economic security will depend on its ability to become more resilient to risks from economic linkages that, let's face it, in past decades were viewed as unambiguously beneficial. But I want to be clear, this does not mean that we should be building a fortress Europe. We should not abandon the openness of the EU economy or seek to decouple from global markets. The emphasis must be on de-risking, not on decoupling. But if we are to de-risk, we will need to improve the international competitiveness of the EU economy across a wide range of fields. And I believe that the financial sector will have a crucial role to play in that regard. Indeed, at least for me, it's difficult to imagine how the EU economy can be internationally competitive without adequate, and therefore hence improved, financing opportunities. And that brings me rather neatly to the EU financial services agenda. We're now approaching the end of this EU legislative cycle, and in the area of financial services, the Commission has delivered a very wide range of legislative proposals which are either already adopted or are currently under negotiation by the Council and the European Parliament. Now, it's not possible for me to cover more than 35 legislative initiatives in my remarks today, unless I'm to get you past midnight as well. But instead, I will focus on a limited number of initiatives in 3 key policy areas, which I hope will be of relevance to the theme of this conference. The 3 areas are sustainable finance, the investment fund sector, and retail investment in capital markets, which will no doubt be discussed a bit more, I think, in the panel that will immediately follow my remarks. So I'll start with sustainable finance. Addressing climate change, I think, is one of the great generational challenges we face, and it will require very heavy investment. The EU will need to invest about 600 billion euros more each year between 2021 and 2030 than it did between 2011 and 2020. And that's to decarbonize its economy and achieve its environmental objectives. The vast bulk of this financing must come from private sources. And to channel these private funding flows, the EU has developed a sustainable finance framework. The sustainable finance framework is not rocket science, let me assure you. It's essentially about market organization. It comprises 3 elements: a taxonomy or a classification system to help investors identify what are sustainable activities, a comprehensive disclosure regime for corporates and financial firms to demonstrate the extent to which their activities are sustainable, and thirdly, a toolbox, labels, benchmarks, ratings, etc. All of these to allow investors to navigate the market more easily. While this framework is not yet complete, much of it is already in place. And today I'd like to draw your attention to a number of specific elements of the framework. On the prudential side, the Commission has proposed rules for ESG risk management and climate risk stress testing in its banking and insurance packages back in 2021. We have also mandated the European supervisory authorities, in close cooperation with the European Central Bank and the European Systemic Risk Board, to test the resilience of the financial sector during the transition towards the Commission's 2030 climate targets, and technical work is now underway on this. So this we are doing on the prudential side. On the conduct side, we are working to address potential misuse of the framework. We have again asked the European supervisory authorities for input here, and on the basis of their findings, the Commission will consider steps to ensure sufficient supervision and enforcement to address so-called greenwashing and ensure consistent outcomes for European consumers and investors. On disclosures and transparency, the relevant regimes for corporates and financial firms are now substantially in place with the Corporate Sustainable Reporting Directive, CSRD, and the Sustainable Finance Disclosure Regulation, SFDR. I should apologise in advance for the many acronyms that the European Commission produces. There are more to come, believe me. Now, as part of our assessment of the SFDR, we recently launched an in-depth consultation exercise. We want to know how the SFDR is working on the ground and if it is fit for purpose. Indeed, for the remainder of this Commission, the focus will be on consolidating the sustainable finance framework we have in place and taking on board stakeholder feedback on implementation challenges. We want to look at ways to improve the usability of the rulebook and minimise burdens, mostly via non-legislative tools. This will be like guidance to markets, frequently asked questions, as well as the consultation on the SFDR that I just mentioned. The Platform on Sustainable Finance, which we in the Commission set up, this is an independent group of experts. They will help here. And the platform will focus on further development of the taxonomy. This work will be supported by the recently launched stakeholder request mechanism. This stakeholder request mechanism is an online tool which allows stakeholders to submit suggestions on new activities that could be added to the EU taxonomy and or changes to existing activities under the taxonomy. It will also examine the monitoring of capital flows to help us understand the progress that is being made on the ground. So as I've said, much of the sustainable finance framework is in place or in the process of being put in place. The challenge now, a bit in the line of the title of the conference, is to ensure that the framework is delivering the desired outcomes in channeling private financial flows to sustainable investments. Turning now to the investment fund sector, well, let me say that a competitive and resilient EU asset management sector is a prerequisite for delivering a robust EU capital market, ensuring financial stability, and delivering that economic security that I mentioned earlier on. So we need clear rules to make sure that the EU asset management sector is resilient in any economic situation. The Commission is well aware of and supports the increased regulatory focus on non-bank financial intermediaries. At the same time, the rules should not straitjacket the sector. They should allow our investment fund industry to be internationally competitive and to serve the interests of their customers. So let me briefly explain how the EU asset management framework is being adopted to reflect this balanced approach. Under this Commission's mandate, there has been targeted reviews of the AFMD and the UCITS directive. In particular, a number of microprudential tools relating to liquidity management have been included, reflecting work at the international level. We are somewhat ahead of other jurisdictions here, but the challenge now will be to ensure that these tools can also be activated at the macroprudential level. And indeed, we've seen a good example of such a macroprudential approach here in Ireland quite recently. Money market funds. Well, money market funds are an important part of the EU fund industry and, of course, are particularly important for Ireland. These funds have been in the spotlight since the market turbulence of 2020, March 2020. That collective experience, I think, taught us that it is important to make sure that they are regulated in a manner that makes them sufficiently resilient to liquidity shocks. On the other hand, we must recognise the important role played by these funds, including low volatility funds, as risk and treasury management tools for both the real economy and the financial sector. I believe that our recently adopted report back in July of this year on the functioning of the money market funds regulation strikes a good balance here. It recognises the economic role of MMFs, but certainly does not preclude a potential further strengthening of the rulebook for the funds. The report highlights that the money market fund regulation has enhanced financial stability overall. However, it also identifies vulnerabilities in the market for money market funds and areas which would merit further assessment, such as those linked to the functioning of the underlying short-term funding markets. The Commission has not proposed a revision of the legislation in this mandate, but we will continue to monitor the sector and related vulnerabilities to identify where there is need for regulatory action in the future. We also note the regulatory developments in the United States and in the United Kingdom, where regulators are moving to increase liquidity buffers for money market funds. In this context, it's worth noting that money market funds domiciled in the EU voluntarily hold more liquid assets than their regulatory limits and generally exhibit sound liquidity management profiles. They're closely supervised, subject to frequent stress tests and stringent liquidity risk management requirements that enable asset managers to increase their holdings of liquid assets when needed. Nevertheless, we might need to consider revising regulatory limits or other changes to the MMF regulation in the future, considering the specifics of the sector and relevant market and regulatory developments. Finally, under the funds heading, we see also important opportunities to boost the competitiveness of the EU investment fund sector, notably with the imminent start of the upgraded LTIF regime. This is positive news for the EU economy and for the development of the EU capital market. With their longer-term focus, LTIFs are an ideal vehicle to support much-needed investments in real assets like green energy, social and transport infrastructure, and listed and unlisted companies. But here I want to emphasise that the protection of retail investors is and always has been a priority. To that end, the co-legislators weigh the risks and have already put in place extensive investor protection safeguards such as suitability assessments, depository requirements, and extensive disclosures. So again, here, the challenge must be to ensure that the investment fund sector can deliver the desired outcome in terms of economic growth, while also ensuring that the sector is sufficiently resilient both to idiosyncratic and system-wide shocks. Let me finish my remarks with the Commission's retail investment strategy. I think increasing retail investor participation is crucial for the success of the Capital Markets Union. As is well known, EU households hold only 30% of their savings in capital market instruments and the remaining 70% in bank deposits. The opposite is true in the United States. Retail investor participation in capital markets can only be durably increased if those investors feel that they are fairly treated and sufficiently empowered within a strong regulatory framework. In considering the appropriateness of the relevant regulatory frameworks, the Commission identified fundamental issues which we believe should be addressed to boost participation on a durable basis. For example, levels of financial literacy across the EU are low, reflected in relatively limited confidence in capital markets among retail investors. Investment advice for retail investors is predominantly inducement-based, implying an inherent conflict of interest for the investment advisor. Meanwhile, the extent of the information asymmetry between a retail investor and his or her investment advisor suggests that the standard approach to managing such conflicts of interest, transparency and disclosure, may not be adequate in this instance. And finally, survey evidence confirms that retail investors tend to be sold products that are relatively complex, relatively expensive, and yielding relatively low net returns. So the Commission's proposal for a retail investment strategy attempts to address these issues of concern in several ways, by promoting greater financial literacy, which is now moving up the political agenda in many member states, modernising disclosure for investment advisors by improving the focus on essential information and via digitalisation, tightening the rules of marketing practices, including so-called finfluencers, I simply can't say that word, maybe they don't exist, to reduce the risk that retail investors are misled in their investment choices, improving the quality of investment advice by introducing a best interest test instead of the existing quality enhancement and no detriment tests in the Market in Financial Instruments Directive and the Insurance Distribution Directive. We want to ensure clear disclosure of inducements that are being received by the investment advisors, and we propose to introduce a value for money approach to ensure that costs do not erode returns to the retail investor. This approach will include the establishment of pricing benchmarks. But I want to be clear, these benchmarks are meant as comparison tools to facilitate transparency. They are not meant as implicit price regulation. And finally, by introducing a so-called partial inducement ban, precluding the receipt of inducements on products where there is no investment advice at all. Now, I know that many of these proposals have proven controversial in the financial industry. To be honest, such controversy was to be expected, given how the financial industry has organised itself to provide investment advice. But we believe that retail investors cannot and should not be encouraged into capital markets to meet our CMU objectives unless we are satisfied that the outcomes for those investors are adequate. So, these were the 3 points I wanted to cover. So I will conclude by again noting that we are approaching the end of the current EU legislative cycle. Much has been achieved in this cycle, but inevitably thoughts are now turning to the next cycle. That's how it works in the Commission. I cannot prejudice the decisions of the next Commission, but clearly the focus will remain on financial stability, competitiveness, sustainability, digitalisation, and making financial services work for citizens. But equally clearly, the macro-financial situation is in flux, and this high level of uncertainty must be taken fully into account in our thinking for the future. And all of that makes this conference very timely and very useful. Thank you for your attention, and I wish you all a very good rest of conference. Thank you.
Thank you, John, for your remarks. I think they bridged well the discussions we had this morning and the discussion we're about to go into. So now we move to our next panel discussion, entitled Securing Customers' Interests, Achieving Good Outcomes in an Uncertain World. I'm pleased to introduce Monique Goyens to give some introductory remarks for this session. Monique is Director General of BEUC, the European Consumer Organisation, which represents 45 national consumer associations in 31 European countries. She's a member of the Euro Retail Payments Board, as well as of the European Commission's Consumer Policy Advisory Group, and she co-chairs the Transatlantic Consumer Dialogue, a network of EU and US consumer organisations. Welcome, Monique.
Good afternoon, ladies and gentlemen. First of all, thank you very much for inviting me. It's really an honor and a pleasure to be here and to provide a little bit the European, so I'm a little bit the exotic animal in this conference maybe, provide the European consumer perspective. It's true, so we represent 45 national consumer organizations, and although there are different sensitivities, different financial cultures, still what I'm going to tell you today is being shared by the whole membership. So it's really the European perspective that I would like to bring to you. Double disclaimer, first of all, I have 10 minutes to speak. I would need until the end of today. And I have this tendency of getting carried away by the topic. So Denise, you just shoot me if I overdo it. Thank you. But that means also the other type of the other end of the disclaimer is then also that I cannot be exhaustive. So I will only touch upon a few things that I would like to share with you, but maybe in the panel discussion later or after the panel, if you would like to discuss other things, I'm happy to engage into any conversation. I would like to say I just love the title, securing customer outcomes in an uncertain world. And I don't even speak about the geopolitics. I really speak about the uncertainties that customers, and I speak for retail customers, have to face when it comes to the financial sector. And I would like to speak about 5 things. First thing, the digital transition, digitalization of the financial services sector. There we start with cybersecurity. And cybersecurity, I mean, everybody speaks about cybersecurity, but who does something about cybersecurity? And I have 2 things to share with you there. First of all, resilience in case of a cyber attack. Have you ever been in a supermarket when the online payment system breaks down? War is declared. This is really so. But when you, I have never been able to identify any resilience plan when online payment system break down for longer than an hour. And that has to be combined now with less and less access and acceptance of cash. So if cash is not a replacement solution anymore, what is going to happen when the system is being attacked or is just going down for 1 hour or for 1 day, for 2 days? An economy without any payment is a dead economy. So I leave that with you. It's not for me to find a solution, but I would just like to say that it's important to provide a resilient system there. And the other side of cybersecurity is an explosion in fraud for online payments. And my colleagues have done some research, and it seems that many people are being frauded when paying online. You know, it's scams, it's phishing. They think that they pay something that they owe, and it's just somebody has, let's say, frauded their account. There are no incentives for the financial services providers to provide solutions because it is an authorized payment. It is not like in credit cards where the system, the consumer has authorized the payment. They have been frauded, but it has been authorized. And so this is really something that is a problem. The average damage for a consumer who has been frauded is €4,500. So it's not like €30 that you just lose once. No? So it's really something that needs to be tackled. And for us in the financial services sector, it's the #1 priority for the next mandate of the Parliament and on the Commission. Other digital issues are, of course, data protection and privacy protection. Your financial services provider knows much more about you than yourself. And what we always say, because we speak a lot about open finance can bring competition in the financial services market. It should not mean an open bar for your data. It's really important that there are safeguards built into the system. Then, of course, we have the huge, I already mentioned it, acceptance and access to cash. This is really a huge problem for people because moving more and more to digital solutions means excluding more and more people. And can I tell you, Norway and Sweden are those two countries where there has been a real policy for a cashless society. They are going back now. There are now regulations being prepared or even in place in Sweden, for example, where at least cash has to be accepted by with the doctor, the pharmacy, or for food. So there is already the side effects of a totally digitalized market are being felt there. We very much support the project, the Digital Euro project. So we, as a consumer organization, are really supporting this project that is being rolled out currently at European level. The second point I would like to make in terms of the uncertainties. I don't know whether you estimate at its right level and magnitude the degree of resignation and of frustration of consumers with ATM closures, branch closures. You just talk to a robot. And the dehumanization of financial services provision is a major problem. And I tell to your colleagues in Brussels, the European Banking Federation or other associations of financial providers, that those banks that are going to reinvest into human relationship and human interactions are going to be the ones that will be the most sustainable in the future. Third point I would like to make, the pension gap. We all know, or at least we believe that the government will not be able to, I mean, the demographics are like that. Our pension system is not sustainable. So we all know to some extent that we need to invest privately. And you heard what John was saying, there is an underinvestment. First of all, there is a responsibility of the customer because there is a lot of procrastination. You need to do that when you're young in order to have a return on investment that is acceptable. But when you're young, you don't do that. I have 3 kids. They are in their late 30s. Very regularly, I give them the booster shot. Have you done something for your pension? And then I get that look full of love for their mother, saying, come on, we have other things to do with our money. And that's, I mean, this is a fundamental behavioral bias of a massive, a critical mass of consumers that needs to be overcome if we want to have a sustainable private pension system. And there, John already mentioned it, we have a major problem with retail investment. And he said there is a lack of financial literacy. I will come back to that. But I think that there is currently a lot of common sense with customers. Because as John also mentioned, financial products are too complex. We don't understand them. Why should we take them up if we don't understand them? And sometimes those who sell them don't understand them. Second, they are very expensive and they have a bad return. This is common sense not to engage in any of those products. So at the European level, what we are now doing, we're going further than the Commission. I mean, he's not there anymore, but John, it is saying we should have a full ban on inducements for financial advice. There should be a space for independent, trustworthy, reliable advice. Not addressing the pension gap is a ticking time bomb, so this is for sure. The 4th point I would like to make is about the green transition. So another uncertainty, another tsunami that is coming up if no action has been taken. And we all need to fundamentally change our lifestyle. So some of those changes are not very expensive. Eating less meat, traveling less, buying other types of clothes. But other changes of lifestyles, our private lifestyles, buying an electric car, retrofitting our homes, buying a heat pump, installing solar panels, those are quite heavy investments. And that means that we need financial solutions for that, public or private. And there I would really like to call on the financial sector. We are missing innovative financial business models that help customers take up this challenge and invest for a climate-friendly future. And I say that also to your colleagues in Brussels. They don't listen to me. And it's really important there also to see that there is it's a good business that you can make as a banking sector, but to really help people bear the upfront cost. Because what is very important to know that both in terms of electric cars or heat pumps or solar panels, the return on investment is very quick. But you have to get several thousands of euros out of that, of your bank account. And that's the barrier that people need to overcome. Also those who are not poor, it's also those people who are middle class and who just don't want to have this upfront investment burdening their finances. And the last point I want to make, I hope I'm still in time, is about financial literacy. Now, don't get me wrong. I'm in this job since decades. I have done hundreds of conferences. I heard every time we speak about financial literacy. Nobody is against financial literacy. Everybody supports financial literacy. But what I would like to ask you is not to stop at financial literacy. Because what I hear very often is, let's educate the consumer, let them understand how it works, then they will be informed and they will make the right choice. No. Because you cannot we are all facing here digital transition, green transition, the pension gap. We are facing systemic challenges. We cannot put on the shoulders of the individual consumer the responsibility of making the right choice. Of course, they need to be educated, but systemic challenges need systemic solutions. That means that there is a need for a regulatory framework or for a policy framework at least that creates the space for consumers to make the right choices when it comes to digital transition, to the green transition, to the pension gap. And if that systemic solution is being established and rolled out, this is good for the consumers, but it's also good for the whole economy. Thank you very much.
Thank you, Monique. I think your remarks have set up this next panel discussion very nicely. So I'd like to invite the participants of our second panel to the stage. Firstly, I'd like to introduce Derville Rowland, Deputy Governor, Consumer and Investor Protection of the Central Bank of Ireland, who will chair the panel. In addition to Monique, Derville will be joined by David Malone, CEO, Irish League of Credit Unions, Annmarie O'Connor, Programme Manager, Safeguarding Ireland and member of the Central Bank Consumer Advisory Group, Myles O'Grady, CEO, Bank of Ireland, Liam Sloyan, Financial Services and Pensions Ombudsman, and Padraic Kissane, Financial Advisor, Padraic Kissane Financial Services. Thank you.
Thank you. I think we've had the benefit of two really great speakers to frame this particular panel discussion, a really expert European perspective from Sean, and Monique then giving a more concrete and very clear articulation of some of the key issues facing consumers. And in the context of our panel discussion, which is about securing customers' interests and the focus being on achieving good outcomes in a world of uncertainty, I think we're going to touch on a couple of key issues that are current in financial services now. You've heard it running as a thread through the other panels. We're at a really transformational point in financial services. It's often trite to say that, but in fact the accelerated pace of change is something we're so experiencing, and particularly with sustainability challenges, with digitalization. It's pivotal that we have and continue to build trust and confidence in the financial system so that people can get on with making good decisions for their lives without worrying about the financial system being a conduit of uncertainty for them. But it's complex, so regulation has to keep pace with change. And of course, part of the conversation here will be about the central bank itself and what we can do with our policy frameworks to ensure that consumers are protected and remain protected into the future. Of course, part of that, you've heard from Sean Berrigan, is us working in Europe to make sure that the European policy frameworks, like the retail investment strategy, when it is brought into force, does so in a way that is really core and effective for retail participation in capital markets and in buying products and services that can serve people as they want to take decisions for their lives. But of course, the central bank has a policy framework that has served us well to protect consumers. But we're going through our own dialogue about modernising and updating that, not least because we need to address digitalisation, sustainability, and of course innovation brings fantastic benefits and opportunities, which I think we heard from Andrew Bailey that we just need to embrace it because it's not going away anytime soon. But we've heard about the drawbacks and the risks. We've heard about concerns around access to cash, and maybe people aren't as digital literate as they would wish to be. And there's other concerns around the fast pace of buying online, and the decision-making framework for that can be brilliant because at the click of a button you can get the product or service you need in your own home, but that's a fast decision as well. So there's balancing trade-offs. And of course we have a challenging economic environment where people have got to run their home, buy food, pay their bills, and make sure their children and families are looked after, as well as try to make enough space in their finances for their economic decisions. We've heard about pension gaps, and certainly we also have new trends. We have the trend of crypto, which is a high-risk strategy for any investor, and you have more and more people buying online, but buying online with a buy now, pay later model, which is actually increasing indebtedness. You've heard about the world epidemic in frauds and scams. And so I think we'll just touch on some of these topics as we go through the panel. As we go through our own consultation on the Consumer Protection Code, we already had a discussion paper exercise before we go to consultation, and we will go to consultation, I think, early in the new year. But we've heard a lot of feedback about what it actually means to secure customers' interests. about the need for availability and the need for choice. We've heard a lot about financial literacy, digitalisation, protecting vulnerable customers, and informing effectively. So I hope that we'll cover some of these topics as we go through the panel discussion now. I might start with Monique, and thank you for your really practical and insightful opening remarks. I know these are heroic topics to try to summarise, but could you outline for us what you think the key changes facing financial consumers?
Mm-hmm. Maybe just to qualify something that you just said, or to suggest, I don't think that we need to embrace innovation. I think we need to embrace progress. And every innovation is not progress, and there is a lot of pollution in the innovation that is proposed. So just to say, because there is this religion about the innovation principle, which is pushed by the industry, not necessarily the financial industry, but also like the food industry or chemical industry. So it's important to say, hey, public authorities are there to promote progress, not necessarily innovation. And in terms of key, maybe from the European perspective, what I would like to say, I already mentioned the key challenges. What is also something that I have not yet heard, but I didn't participate to the whole conference, is the need for competitive markets. And that means we have the potential of a single European market for financial services, and this potential is totally underexploited. Because at the end of the day, our markets are fragmented. And not only because you are an island. I live in Belgium, in the middle of Europe, and we don't have access to cross-border financial services, only in a very marginal way. So there is a lack of integration. And there have been studies that have indicated that that has a very important negative effect on the cost of financial services. So that could be something that could be promoted also in a much more proactive way. In order, there is no prohibition to go cross-border for any service provider, but there is no appetite to do so. There are some barriers, and there are certainly also there are like fiscal policies that might be an important barrier, but there is no prohibition to do it. So why not provide customers across Europe with interesting, competitive financial services?
That's an interesting observation, and of course, often digitalisation is pointed to as an opportunity for that to in fact happen. But if I go to Liam, could you tell us from your perspective what changes you see for consumers in Ireland?
Yeah, and I suppose, thanks very much, Derville. I suppose my contribution today, I'd like to touch on a few themes really around the complexity of the products and the provision of the products, the importance of empowering consumers, and I suppose from our perspective as well, the importance of avoiding complaints arising with consumers and then resolving them at the earliest possible opportunity, and to touch on the role of the FSPO, the Financial Services Pensions Ombudsman. In terms of the significant changes, then I think Monique has spoken about digitalisation, and you know there are potential benefits there in respect to the new channels, new services, improved services in some respects, the risks around fraud and cybersecurity and access to cash. But I'd like to add on to just note there in the context of the complexity of the products that the level of rapid change in respect of how products are being delivered is being layered on top of this complexity, and it can increase the challenges for consumers in many respects. I think a lot of the complaints that we receive, that complexity, I think that's challenging to consumers and maybe not fully understood the impact it's having on consumers by the providers. It comes through in those complaints. For example, many complaints that we'd receive would relate to a product or a service that's been provided by multiple providers. It might be an intermediary, an underwriter involved, or whatever the case may be. And even by the time the complaint gets to us, when a final response letter has been issued and everything, the customer is still not clear as to who is responsible for the conduct that they're complaining about. And I think that's so. I think it's important for providers to look at their communications with consumers and to bear in mind their perspective and their level of understanding. And I agree with Monique around the financial literacy. Of course, it's important, but we can't expect people to know everything. And what's critically important is that they get the information they need at the time that they need it, such as in the financial response letter that could say, yeah, you know, the conduct that you're complaining of relates to whichever provider. And then also, I suppose, in addition to the, so in that context around managing the complexity and the rapid change, I think it is critical for providers to ensure that they maintain channels of access from the consumers to the provider that are welcoming, that are open, that are seeking the feedback, seeking the complaints, working with consumers in a way that they feel comfortable. And I suppose another area of significant change in Ireland is obviously the market exit of two major banks. And certainly, I think at the beginning of this process, we would have been looking at this and thinking that there's potential for a large number of complaints to come into our office in respect of the level of activity and level of transition that we've involved. To date, we've received of the order of 300 complaints. So I think it is positive that the vast majority of consumers were able to manage the transition in such a way that they didn't require to bring a complaint to our office. And I think that's been achieved by a lot of the things that we've been talking about, a lot of good communication, a lot of engagement between ourselves and the providers and the sector, identifying the types of complaints we are receiving and bringing that to the attention of the providers so that they can address those types of issues before further complaints arise. And that's actually a structure that exists across all of our work. So, you know, we do engage with providers in these matters. We do publish our information in respect of our decisions, in respect of our overview of complaints. So all of this information is there for providers to turn to and to look at and to see the types of issues that are arising, and that'll indeed be able to help them to resolve those complaints.
So that's really leads me on maybe to speak to Annmarie and ask her what she sees as the opportunities and benefits are, because a lot of the concern with two of the major banks leaving the jurisdiction was we knew more than 1 million customers had to move banks, and that's a huge ask in any system, especially when you're on any annual basis don't deal with that volume. So I think we've talked a lot about policy and risk and issues today, but that's also a practical exercise where we saw a systemic issue and all of the system worked well together to come together to play our part to try to minimize that. I don't say it's perfect or at all, but I say certainly working together can often be the best way to de-risk, which is what we heard is part of what we have to think about to avoid problems. But Annmarie, what do you think the opportunities or the benefits and risks you see for consumers?
Well, I suppose the first point is to say in terms of challenge, I think as a nation, as a society and across Europe, but in Ireland in particular, I think our demography is a challenge and will be. We have an ageing population. I think the pace of the acceleration in that change is the highest in Europe. It's great. We can now expect a life expectancy of 83. So with that brings many societal changes. Of course, the reason for that change is the decline in fertility rates. So we have a younger population, an older population, an ageing population. And one of the biggest challenges I perceive is the need for intergenerational solidarity between those two generations. So I read someplace this week, 70% of Gen Z expect to emigrate, to leave the country, okay? I heard somebody else say on the radio that we face a future where old people are looking after older people. So in terms of the challenge and then the opportunity and the risk, well, the risk is obviously that we don't modify or transform our financial services to meet the needs of a young generation and to meet the needs of an aging population. So I think we need to view the life cycle as being much longer. I think we need to view the life cycle as starting much earlier. So there's a range of things we can do, obviously data, using data. I think I'm right that Sharon announced that there's a new consultation on innovation just to be launched or being launched today. Is that correct, Derville?
Yes.
So that's really exciting, okay? And I would see a first priority to look for innovative products to meet the challenges of a changing population. That, I think, you know, the product offering that exists, that's provided across markets, must be there for young people and for older people. So, okay, we've heard a lot about literacy today as well. We've heard about digitalisation, and we'll hear more about it. But something that I think is really lacking, and maybe it touches on some of the things that were said about retail investments previously, but lifelong financial planning. It's something, you know, we rarely talk about. I think when Mairead McGuinness was here last year, she said we need to start talking about money. We need to start talking about money, like we really do. So, you know, one of the things I read recently is that of adults with a disability, 70% of those people who acquired the disability over the age of 16 had acquired that disability between the ages of 20 and 64. So they were most likely working at that time. So that, to me, signals the need for us to really consider income protection insurance. Again, it's something we don't really talk about. I read a recent article by the WHO, and similarly, there was one in Nature recently about what they are saying is an epidemic of early onset cancer. Okay, so younger people are being diagnosed with cancers at a rate far greater than in previous generations. So these are huge challenges to how we survive, and we have to start looking at the products that we are offering people to sustain them over a longer lifetime. So again, just in terms of products that I think are really interesting and crossing over into digital, things like smart automated savings for young people, I think that's wonderful. And ideally, if you could link it into a pension pot, even better, fantastic. And that capability exists right now. We heard about buy now, pay later. I've seen a wonderful example in Australia of save now, buy later. Great opportunity, fabulous, you know, really, really important. Then in the mortgage market, there are other things that I think are great. I'm not quite sure why we don't have them, but offset mortgages to me seem like a very sensible idea. Maybe there are huge risks that I'm not thinking about, but again, it'd be really useful to have those conversations around the types of products we need to live sustainably for longer, and also to enable young people to have access to the things that they need. Because again, to me, I think we're possibly living for the first time where our wants are more accessible than our needs. So the things that we really need have become less affordable and less accessible, and financial services could really change that.
So two things occurred to me. I think when I started to move more into this area, I found that Irish people are more reticent to talk about their finances than their health. And that's often different in other countries, that they're more reticent to talk about their health. Usually that's the #1 privacy concern. So we do need to talk about money and our finances more. But I'm sure Myles might have some answers for us now. As a product producer and provider, what do you think these changes and challenges mean for choice and availability for customers?
Absolutely, and firstly, let me just say thank you for the invitation to be here today. I suppose more broadly, first of all, it won't be a surprise to anyone when we talk about the unrelenting pace of online adoption in the financial services sector. It relates to many sectors and indeed relates to society more broadly, so it's having a profound impact. I often wonder if we were talking to a 20-year-old today and were to tell them that 30 years ago, if they wanted to do their banking activities, it would have to take place between Monday and Friday in a branch that was only open for limited hours. I mean, it's inconceivable. In fact, we were talking last night that the first ATM came into Ireland in 1980 in a branch in Sloyan in South Dublin, and we've seen the rapid acceleration of 24/7 online services. So we know there's a huge demand for that now. Clearly, that's not a surprise. It also comes with risks as well. As long as there has been money, there has been fraud, and certainly the increased rate of online adoption has increased that fraud risk as well. And that's certainly a priority for the banks to respond to that. And just two other very quick points, and I will come back to the product question, Derville. When I spend time with our customers across the length and breadth of Ireland, yes, of course, there's a discussion about online adoption, but at the heart of it, what I experience is that a desire from consumers to have a bank that they can trust, that a bank that is dependable, that's actually useful, those very basic words. And that's as it has ever been, and I believe will be into the future as well. And another kind of slightly interesting data point, I was in the northwest of Ireland about 3 weeks ago talking to customers and talking to colleagues in a branch, and they made the point that actually cash usage is now higher today than pre-COVID. That's a really interesting statistic. So yes, we can talk about the absolutely unrelenting pace of online digital adoption. We also know access to cash remains key. On products, that gets you into a conversation on financial well-being, and Bank of Ireland has chosen that as a particular topic to go after for the last 5 years. We think it's really, really important. It links directly to ensuring great customer outcomes. And I'll give you a very brief anecdote. There was a piece of research done with a set of postgraduate students from a university. I won't say what the university was, but they were tested on their level of financial literacy, and they scored poorly. And that is not a reflection on them. That is a reflection on financial services and our role, which I think is a point that Monique was making earlier, the role that we have. There are many examples of it from a product perspective. So back to the pension point, 1 in 3 private workers in Ireland don't have a pension, yet we have lots of cash in the system. That's an issue. There are many customers, when you look at the data, who only make minimum payments on their credit cards and incur charges, and actually they could pay off their credit card. And we communicate with them now to say, you've got enough money in your account to pay this, you should pay it. And picking up on the discussion from earlier this morning about deposit rates, and particularly in the context of there being less banks in Ireland now, there's an obligation on the banks in Ireland to have a very balanced approach to how we react to an increasing rate environment, not to push mortgage customers into affordability issues, but also to reward deposit customers as well. But I can say to you, as a bank CEO, I want to see our customers move from non-interest-bearing accounts into interest-bearing accounts. And we have campaigns, what we call below-the-line campaigns using digital media, but also headline campaigns as well in the national press. That's really important from a financial well-being perspective as well.
Thanks. Padraic, you also work in financial services, and with your wide customer experiences, what do you see as the key issue? Keeping up with regulation, the products and the advice in this changing landscape for your customers?
Well, first of all, just the point that was mentioned earlier about finance and health, I actually do believe they're connected. I believe if you have good finance journey, your actual health can improve. But financial services generally for ordinary consumers, the word I use is it's becoming simplified in some areas, like the areas of transfer of money and cash and so forth. And that presents problems and issues, but I think it's been driven certainly by the next generation who are going to demand this, and I think that simplification of finance is going to spread to some of the more complicated products, particularly mortgages, a point that I would continually try to make. The online entities nearly have an advantage over mainstream banks, particularly with regard to levies and areas like that, which I think there needs to be a bigger discussion about this, because it's putting some of the main banks at a disadvantage. When you then move to the discussion around cash and branches and closures and so forth, that becomes a massive issue in terms of trying to educate the consumer base that some things have to change, but bringing them with us, particularly the elderly, is a huge challenge. it's a challenge to all of us collectively to try and keep up with the changes that are being demanded by some of the consumers and being implemented by a lot of consumers. And it would help us if we have a view of it being a challenge, but also being the opportunities that are within it, because I think there is massive opportunities. As I said to Monique earlier, I'm continually intrigued about the one union economy when we're not. Yet we voted for it and we're supposed to be part of it. One of the things I think, back to the customer experience and the customer outcomes, I think is hugely, hugely important that the education piece, sometimes you've actually got to bring customers through the entire journey. Telling them and issuing things is not enough. And that was highlighted hugely with the closure of some banks, where a lot of people came to me and they literally had to take the elderly from step 1 to step 2, no matter how many advertisements occurred or no matter how many welcome aboard signals. And to finish, I would say a quick note of importance to the staff in entities like the credit unions and the banks, because generally my view in talking to a lot of consumers is if you have happy staff, customers generally have a good outcome. And I think it's something that should be remembered.
So I think that last point speaks to culture, actually. Well-motivated staff, and remember, people who work in financial services are consumers and they're members of communities. I might ask you, David, how do you think customer choice, access and value should be thought about?
Yeah, I think it's important to look at the competitive landscape as well itself and how competitive is the financial services sector at the moment. There was a survey done last week by Census Wide where 2/3 of adults said there wasn't enough, in their view, competition in the financial service sector itself. And if we look at the history of the sector, you know, the two big banks left, obviously. So we had pre-financial crisis, 12 main full-service banks, were down to 3. And there's no full-service bank that's entered the financial services sector in the last 15 years. And I think it's interesting to see how has that impacted on choice, accessibility, and also in value. And if I double-click on the mortgage market in particular, which is probably an obvious one to look at, Derville, the range of providers, there was new entrants into that market, and there was talk earlier on the previous panel about non-bank lenders, and they did enter the market. But I think we need to look at the competitive landscape and the number of providers in terms of financial stability, in terms of the peaks and troughs of the economic cycle, and whether those providers have access to credit and are able to lend out on a sustainable basis to the public and to the consumers. And I think we've seen a change in that already in the non-bank lenders. You know, the pressures they've come under in terms of they're very reliant on wholesale funding itself, which has impacted obviously the affordability for consumers down the line as well. And I think that's had a significant interest in the mortgage market. Recent activity, I think there's over 90% now of mortgage activity really with the 3-pillar banks as a result of that. And, you know, you're really looking at the impact on consumers of this as well. We've had 10 ECB rate increases. Not all of them have flowed through yet to consumers themselves. But there's 60,000 who are on fixed rate mortgages who will migrate off that by the end of the calendar year. And there are 60,000 next year. And there's 300,000 as well on variable rates. So there's 400,000 plus people who could be impacted by impact on interest rate movements themselves. And if you look at an example, really bringing that down to brass tacks in terms of a family who's a 300,000 mortgage, say their rate was previously 2.75%, it now goes up to plus 4.5%. The additional mortgage increase is €300 per month. And that's 3,600 per year. That's a huge amount. And I suppose putting my credit union hat on, if I can, talking about the new credit union legislation that's coming, which we're all really excited about. It's going through the Dáil at the moment. It gives a great opportunity, I think, for the credit union sector to collaborate. We've seen our mortgage activity in credit unions over the last year go up 40%. But we want more and more credit unions to provide mortgages. And I think credit unions can provide a really compelling alternative and much needed competition in the space itself. If I just touch on another aspect of the question as well around accessibility, I think accessibility is very important as well in terms of the distribution channels. So it's not just about online. Online is good, but it must be complemented, particularly by, I think, that in-branch experience in many ways, particularly given the complexity of some products. SME lending jumps to mind, mortgages again. The Retail Banking Review had a consumer survey in it, which mentioned that in even the younger age bracket of 25 to 35-year-olds, they want that face-to-face contact when they're making those lifetime decisions like a mortgage. And also in terms of SME lending, the complexity of business lending needs that kind of face-to-face contact itself. So I think all those factors combined, it's important that competition, and if we have a number of providers, that they're meeting those accessibility challenges and with choice as well.
So I'm conscious that this is particularly a panel where we should ask for some questions, I think, or comments from the audience. So I'm sure there are people on the floor with mics. I'm blinded with lights, I'm sorry to say, so I can't see. But please put up your hand if you'd like to ask a question. I see a friend of mine with his hand up. So I see Brendan has his law of Asus. And certainly if you could identify yourself and say what organisation you work with before you ask your questions. And if there are any more, line up please, and we'd be happy to take some questions.
Brendan Burgess, consumer advocate, askaboutmoney.com. I had to put my glasses on, Myles, to see had you kept a straight face when you were speaking about consumer well-being. I mean, we're talking here about financial literacy, we're talking about product innovation. I mean, Bank of Ireland, innovation means to you bringing out products by which you can extract more and more profits from people by exploiting their ignorance and exploiting their inertia. Bank of Ireland brought out things like cashback, and you discriminate between existing and new customers. And this is a completely and utterly anti-consumer product. And as a result of that, PTSB and EBS needs to follow. And it is like, it's extraordinary that you can actually sit there and talk about financial well-being. A mortgage product is a very simple product. And what you should be doing, and what the central bank should be doing, is making sure that Irish banks treat customers fairly, and you should be competing on mortgage rates and mortgage rates alone. You should not be introducing artificial features, like this is what you call innovation. You should not be introducing artificial features so that you can exploit customers. And I think that's something that I'd like you to address, because it just makes no sense, and then you talk in the same breath about financial well-being.
Thanks, Brendan. And if we could just see if anybody else would put their hand up and want to make a comment or ask a question, you'd be welcome, and we'll try to gather a few. So please.
Hayley Williams, BNY Mellon. I'm not sure if this is working.
Yes. Hi, Hayley.
Just in terms of competition, what do you think third-party providers such as Revolut, and what do you think they can offer to the market, and also what risks they pose?
Okay. I have also got an online question as well, which I'll throw into the mix. It's, I think, directed towards Monique, which references the lack of cross-border financial services and competition there. So could you talk a bit about the barriers, or what you think the barriers are to that happening? So that, I think, complements your question. I think it's important to take some questions, even because this is an important topic. So if anybody else would like to make a comment or question, please do. I can't see. Pardon? Okay, so maybe we'll go ahead and see. Myles, will you try to address all that Brendan levelled at you, and see if indeed anybody else would like to come in on that one as well? Feel free. And then Monique might answer a little about cross-border, and anybody else who'd like to offer a view on Revolut or other innovators, please do. So we'll start with you, Myles.
Sure, thanks, Revel. And Brendan, let me say to you that I take our commitment to financial well-being very seriously indeed, and that's simply why you didn't see a smile on my face. We've been clear to set out that as part of our strategy and as part of my job as CEO, I'm determined that we deliver great outcomes for customers, for colleagues, for shareholders, and indeed for wider society. Bank of Ireland has been in the Irish market for 240 years. we have a role to play in the economy, and we have a role to play in society as well. We'll have to disagree on the cashback product. I simply don't share your point of view, but I respect it. I think there is a wide choice of products available, both from Bank of Ireland and from other providers, whether you want a cashback or not. Some customers like that because they struggle to get a deposit together to pay for the deposit on a mortgage, and therefore a cashback can help them fit out their home. Of course, ultimately they pay for it in the overall price, we know that, but it is a product that is attractive to some customers, and we're meeting that need. I think more broadly, just to pick up on the point that David made, I would concur in relation to the mortgage market. We've had two players leave the market, and at the same time, the mortgage market is growing mainly because we are beginning to get our arms, not as much as we would like, but with the supply of new homes into Ireland. So those two factors, two players leaving and a growing mortgage market, means that the mortgage market in Ireland is attractive. And, you know, David, you and I spoke last night. I very welcome competition in this regard.
Okay. David, did you want to come in?
Just briefly, just on the customer aspect, I suppose, and thinking about that, I think in terms of the retail banking review, that put forward the concept of a customer charter as well, which I think is an excellent suggestion. I know there's been really a lot of work done by the Irish Banking Culture Board as well, and Marion Kelly and the team there in terms of driving that. And I think that's really important that, you know, the future strategies of financial services providers are very much focused on the customer. It has to be customer centric, and that has to be linked to the sustainability of the financial institution. If you're not putting the customer first, you don't have a long shelf life, I don't feel. And I think, you know, in the credit union sector, we're well known for trust. We're well known for winning the Customer Experience Award 9 years in a row and #1 in the Reputation Agency Award. And we've always tried to understand what's actually behind that. And actually what it is when the credit union sector was established over 60 years ago, they had 10 operating principles that they actually lived by. And those principles are very much linked in with ESG, social responsibility, education, services to members, social responsibility. And I think it's important to always put those first and foremost in anything you're doing. And if you keep that approach, you can never go far wrong with the consumer side.
Okay, so Monique, can you illuminate us a bit on cross-border, and if you worry about particular entities or not, or is that online cross-border provision a good thing? What's your take?
We believe that, yes, I think that that's really good element of competition. Of course, I cannot say that this specific companies are good or not good. They create pressure on the incumbents, if I can say so. On the other hand, there are risks related to online companies, be it data protection or also what happens to the data when those companies are not located in the EU. Should I also answer the cross-border?
Yes, please.
Yes. In fact, first of all, there are natural barriers. Of course, it's the language barrier, so that's something. But what we see is that we are still in fragmented markets, and we see that financial institutions are quite reluctant, because even if there is a level of harmonization in the financial regulation, but there are other elements that come into play, like contract law, like going to court, and the banks might be very reluctant to engage into contracts with the cross-border element, because they might need to adapt to the domestic legislation and jurisdiction of the client. When we ask banks why they refuse to open a bank account for a non-resident customer, they speak about anti-money laundering, know your customer rules. I think in an online environment you can do that without seeing the person and online banks do that, by the way, anyway. And then there are also, of course, for mortgages, it's the security. If the house is not in the country of the bank, it makes it much more complicated to have the security safeguarded, or at least to know how it works. And there are tax incentives in some countries. There are certain types of investments or insurances that are being, let's say, they have a fiscal advantage, but it needs to then to be linked to not necessarily a domestic contract, but to a specific type of contract that is only available in that country. So there are still a lot of barriers, not of the responsibility of the financial sector, but some of those could also be overcome if the customer goes to the country, because then under international private law they are not protected by their own legislation.
So we have 10 minutes, I'm told, and I know we'll stand between you and lunch, but I want to get through as many questions as I can because there's a lot to cover. I'm going to ask you, Padraic, about customer inertia. We've heard about options, offers, customer choice, but is there any kind of view you have about helping customers access the products and services that are out there that might be better for them?
It's a huge issue. I think banks and the collective financial world nearly trades on the inertia of people and the procrastination and it goes with human nature. Particularly Irish people, they don't want change. And if we specifically look at the elderly here, you only needed to see the issues with the two banks leaving and what we thought was going to be a tsunami of issues, and actually a lot of it down to the welcoming banks that and credit unions and so forth, that it wasn't as big an issue as we thought it would be, but it was a very big issue for certain individuals. So in their world, it's an enormous issue. In terms of how do we deal with it, the next generation deal with it their own way. They're the ones that are nearly driving the change of financial services rather than financial services driving it, where the older generation, there still has to be some hand-holding going on. The education process, that lovely collective word of getting everybody educated and financially literate, sometimes it's not even enough because, and we'll talk, I don't know if we'll have time to talk about the fraud area and the scam area because it's a fertile ground. Particularly the elderly who have landlines. You can literally make up a number, and if you get through to somebody, you can pretend you're anybody because you've got through. The next generation and mobile phones and so forth is a little more difficult. It nearly has to be enacted by the consumer, but the landline issue for the elderly and the area of scams, there isn't probably a person online or here in the audience that hasn't been attempted to be scammed. And it's a huge issue. Myles and those will know more on the security side. But in terms of I did want to make one issue about the overnight depositors, and it was the reason I brought the question up was, are we trading on that inertia? And the question I've always posed, both media and publicly, is it fair what's occurring? The overnight rates weren't always as low when we were at interest rates that they are now, and I'm constantly challenging banks that if the customer doesn't move to the better paying accounts, at what point do we question the fairness of this? That they mightn't change because they don't want to change, because a lot of people still remember the around the block queues at Northern Bank and the mistakes the collective banks made, and with state ownership the blame game still goes on to some degree. It's starting to slowly dilute, but it's still there, and I'm just challenging probably the financial services, saying it's okay to have a 3-year fixed account, but is it okay if I don't move to it that I'm still dealing with 0.1 of 1% with my money because I'm afraid to move it?
So if we look at then the key concern for you, Annmarie, as you look forward, are you more concerned about the demographic issue, digitalisation, combination of both? What would keep you awake at night?
Well, I think there's much to be optimistic about. I certainly, from my dealings with financial services, regulators and so on over the last 15 years, I think we've developed a very strong infrastructure in this country. The components are there, they work well. Consumer protection is something we talk about. We, I think, as a nation have developed some understanding of it. I think we're interested. There is a kind of latent amount of interest in, these new innovations. To revolute is a verb. So I think all of that is very good. I think where I have some concerns is around the component parts and how well they actually work together in terms of the consumer protection framework. So, this is a newly developed infrastructure. If we consider, for example, the additional components such as the insolvency service that we didn't have 15 years ago. So, getting all of those systems to work effectively together is really, really important for consumer protection. The other thing that I would say, and it's something that does actually worry me, and maybe it wouldn't worry other people in the room, and maybe, it's interesting that we have Brendan here, and Brendan is a very important consumer advocate, and those contrarian voices are really important in financial services, to have voices who are outside of the system being able to reflect back their experiences and innovation was mentioned in the context of the UK this morning. One of the things that I really envy, and I do worry about it, we don't have a system or a structure or a way of supporting consumer advocacy in the innovation space like they do in the UK. So if you look, and maybe Monique will have perspectives on the role of these organisations across Europe, because they are really important, because the risk of groupthink is constant. So in the innovation space, there's fantastic work being done by a range of organisations in the UK. We simply don't have that layer here, and we are reliant on people like Brendan, a small number of individuals, to highlight issues of concern. I would like to see a more informed, evidence-based consumer advocacy stream emerge to challenge financial services.
So if you bear with me, I just want to see if David and Myles can give me their succinct top areas where their business models are adapting to serve the changing landscape. I'll go to David first, then Myles, and I'll give the last comments to my other panellists then.
Yeah, I think in the credit union sector, I think one thing we're looking at, I suppose, is the products we offer. So we have a significant footprint of 400 locations across the country, but we're looking at how we deliver those products in more meaningful ways. So digitalization is something now the credit union sector is embracing, and we've very much that focus of having a digital need where you need it, but also having the human touch when you want it. So I think that's really important to have that distinction. We offer, multiple ways of engaging with us. So digitalization is very important in terms of current accounts. We now have 1 in 10 new current accounts opened is with the credit union sector, and it offers contactless, Apple Pay, Google Pay, all the best in class. What we want to do is complement that now by widening our product range for members, and that's really important, I think, for the public. I've mentioned mortgages, but also SME lending as well, and using these collaborative approaches where credit unions come together in a standardized way and deliver those products. So that's a succinct, I suppose, view.
There are many, but I would say sustainable lending is probably very close to the top of my list. I could go on for more, but that would be probably number one.
That's really helpful. And then I think the Ombudsman, the insights you're getting, what are your key forward-looking concerns?
Yeah, so from our perspective, I think in looking at the consumer protection framework and the role of a dispute resolution service in that, I think we're fortunate that in Ireland it's been very well recognised by the Oireachtas the importance of the role of the dispute resolution service, and the powers that the Ombudsman has in Ireland are amongst the strongest that there are internationally, in respect of the ability to direct compensation of up to €500,000 to direct rectification. And our decisions are legally binding as well. So this is a key element in the role of ensuring that consumers have the power to bring issues, to bring complaints, to see their rights, to see their complaints heard. And but I think another key part of the consumer protection framework, it does come back to where all the engagements are happening. These engagements are mainly happening between the providers and the consumers. The providers, of course, have a responsibility in respect to their own cultures, their processes, their controls, to make sure that these interactions operate properly. And it's important as well, I think, that consumers are empowered, that they have these powers which the Oireachtas have enabled through our Act and others, and the work of the Consumer Protection Code and other things as well. But also that I think just one thing I'd like to mention, which is a common theme across ombudsmen, is that even where people have powers, there are a lot of people who don't appreciate, who don't know they have them, and those were people who maybe wouldn't consider bringing a complaint to a major financial institution in the first place. And so I think that's why the interaction between providers and consumers is key. That providers operate in a way that they welcome the complaints, and that they work to resolve the complaints, and they take on the feedback, and they address these things as early as possible.
Thank you. Last word.
Yes, first of all, I would like to make sure that it is well understood that when we speak in the context of the digital transition about generation, it is not a question of generation. It is a question of age, because we will not be artificially intelligent. We will be human beings, and as you age, your cognitive and your psychomotor skills go down. So you will not be able to adapt to innovative models. And it's not because it's a generation, it's your age. And I'm starting to already feel that. And so the first thing. The second thing is, but also with digitalization, open finance, we will have more and more players in the financial sector markets that are not part of the financial sector bubble. They are not from Europe, they don't care about our culture, they don't care about consumer protection, they are Silicon Valley inspired, and they just want to innovate, and no matter what happens to consumers afterwards. And there, in terms of enforcement, it's a major challenge because they are out of our enforcement sphere, if I can say so, and there needs to be something happening there because they cannot just free ride on our financial services sector.
Thank you for your time. It's obvious we could have taken any one of these dimensions and gone into a deep dive. I'm sure in the code discussion next year we will do exactly that, and the debate is enriched by the diverse perspectives. Thank you to our panellists.